Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/rive to receive the top 10 stocks to buy right now. Proto Labs recently reported their first quarter 2023 results, and I think this is an interesting company that tells us where manufacturing is going in the US, how many new products are being built, and how much of that work on a small batch basis is being outsourced to companies like Proto Labs. If you remember a decade ago, things like 3D printing were all the rage. But a lot of those companies really suffered. What actually ended up being successful was a company like Proto Labs, which is basically a third-party manufacturer doing small batch manufacturing runs for either new product prototyping or just products that aren't going to sell a lot of units. This is one of those stocks that I don't own. I've never actually owned shares of Proto Labs, but I really like the company and I like what it's trying to do in the market. So let's dig into the results. My name's Travis Hoyam. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content. And let's get right to the results. First, I'll just show this is the stock chart over the last week. You can see that investors really liked what they saw. The middle of last week, shares were up pretty nicely. And this is what the quarter looked like. Not shocking numbers from Proto Labs. Revenue was up 1.4%. That's not a lot of growth for any company right now. But to $125 million, this is a company that's worth about $800 million. So a run rate of $500 million in revenue, pretty good value territory, especially when you look at gross margins being in the 40 to 50% range, 42.7% in the first quarter of 2023. Did report positive net income of $2.7 million or 10 cents per share. And then on a non-GAAP basis, net income was $7.9 million or 30 cents per share. The company also repurchased $21 million worth of stock. I'll cover that in just a second in the statement of cash flows, and has a cash balance of $104.7 million. Doesn't have any debt. So great balance sheet, profitable business. The question here is really, can they juice growth long term or increase those margins in any way? I'll just highlight the balance sheet here really quickly. $62 million in cash. They have some short-term marketable securities. And like I said, no debt on the balance sheet. Have some payables. This is actually one of the things in the cash flow statement. Operating cash flow is going to be a little bit higher than it was a year ago, in part because some of these payable, like accounts payable and accrued compensation, increased from a year ago. This is a look at the segments the company reports. Injection molding down a little bit, CNC machining up slightly. Same thing with 3D printing. And the sheet metal business was about flat for the quarter. And operating expenses did rise a little bit on an increase in marketing and sales expenses. This is that statement of cash flows. And like I said, operating cash flow was up pretty sharply, about $5 million from a year ago. But that's due entirely because of changes in operating assets and liabilities. So that's when you increase your payables, you actually increase the cash flow that you have as a business. So that's something that will ebb and flow over time for a company like Proto Labs. But from a fundamental basis, cash flow from net income, add back some depreciation, amortization, and stock-based compensation, that was actually down from a year ago. So without some of these balance sheet changes, cash flow was a little bit worse than a year ago. And here's the other big thing, $21 million in stock repurchased. So at the end of the day, cash balance was only up about $5 million after that repurchasing. In general, I think it was a decent quarter for Proto Labs. Results weren't great, but they also didn't decline sharply as companies try to cut back on a lot of operating expenses and maybe even some R&D expenses. That's the kind of thing that's going to hurt Proto Labs. The challenge that I see from an investment standpoint is that this stock just isn't a great value right now. We see the earnings of 10 cents per share, and with the stock trading at about $30 per share, there's just not a lot of value in that. Now, if management can increase revenue a little bit, increase those margins, get a little leverage on that sales and marketing, R&D spending, I think that's where this could become a really good investment long term. I'm going to look for signs that there's improvement, especially on that revenue side. So whether that's volume or pricing, either one of those things would really help. And I think there may be a possibility that we see some pricing improvement as interest rates rise and we have some inflation pressures. That will maybe give the company the ability to leverage some of the investment that it's made in equipment in the past. But until we see more evidence of that, it's not a stock that I'm buying yet, but I'm intrigued by what's going on at Proto Labs. What'd you think of this? What'd you think of this quarter? Leave those comments in the comment section below. Don't forget to follow Rive Investing. Thanks for watching, everybody. See you here next time.